All right, so what does the future of crypto actually look like? Today, we're going to jump ahead to 2026 and forget staring at the daily price charts for a second. We're digging into the huge fundamental shifts that experts see coming, the ones that are set to transform the entire digital asset economy.
And yeah, we're going way beyond just will the price go up. We're looking at this incredible new outlook from 21 Shares, and it paints a picture of how the whole crypto economy is changing, kind of growing up and getting ready for its next big chapter. And this quote, man, it just nails it. The whole idea is that the crypto market is finally maturing. So those wild, euphoric boom and bust days, they're giving way to something a lot more solid, more stable, something that's actually being built into the global financial system.
Okay, so let's get into our first big theme here. And it all kicks off with the OG asset itself, Bitcoin, and how its whole personality seems to be changing. So for like over a decade, Bitcoin's price has done this predictable dance, right? It follows the rhythm of the halving, which is just this built-in supply cut that happens every 4 years. Well, the first huge prediction we're looking at is that this whole predictable cycle, it's over, it's broken.
And this is where it gets really interesting. Just look at the data here. Those blue and green lines, that's the old Bitcoin. You see these absolutely gut-wrenching drops, right? Over 60%? But then, check out the yellow line. That's right now. The dips are so much smaller, they're not even hitting 30%. What this means is that Bitcoin's legendary volatility, it's actually shrinking.
So you gotta ask, why is this happening? Well, it's pretty simple actually. The market isn't just driven by hype anymore. Now we've got big, structural money coming in from ETFs and major institutions. They aren't just gambling. They're using Bitcoin as a serious hedge against inflation. They bring in patient capital, which calms everything down. And the trade-off is pretty clear. You get smaller dips, but you probably won't see those insane face-melting returns of the past either. All right, so if all this big money is flooding in, how exactly is it getting into crypto? That's a great question, and it leads us right into our next theme, the massive new highways being built from traditional finance straight into the digital world. The first big on-ramp is something called exchange-traded products, or ETPs. Just think of them like the ETFs you'd buy for stocks, but for crypto. It's become the go-to regulated way for serious investors to get in on the action. And the growth? It's just staggering. We're talking a predicted $400 billion in these things, which is enough to maybe even overtake the huge QQQ tech ETF. That's a big deal.
But the other on-ramp? Whoa, it's even bigger. I'm talking about stablecoins. These are basically digital dollars, pegged one-to-one with currencies like the US dollar. And they're on track to be a $1 trillion market. They're like the plumbing, the absolute essential wiring that holds the entire digital economy together, making everything from trading to global payments actually work.
And look, this isn't just hype. This growth is happening for real reasons. For one, we're finally getting some clear rules from regulators in Europe and the US. Plus, you've got the absolute giants of finance. We're talking Visa, Stripe, MasterCard, all building stablecoins right into their systems. This isn't some fringe idea anymore. It's becoming a key piece of how money moves around the world. Okay, let's shift gears, because with all this maturity comes something else, serious competition. And you know how it goes. When things get competitive, not everybody makes it to the finish line. We're about to see a huge shakeup in the industry.
So, first up, there's this new kind of company called a digital asset treasury, or a DOT. The easiest way to think about them is as these specialized investment firms that just hold massive amounts of crypto. And this whole sector is expected to balloon to over $250 billion.
But here's the catch, right? That kind of insane growth creates a ton of pressure. And the prediction is that a lot of these firms just won't be able to hang on. They won't have the right game plan or enough cash to survive a bad market. So what we'll probably see is a bunch of them fail or get bought out until only a handful of big, dominant players are left standing.
And you know what? We're seeing this exact same story play out over in the Ethereum ecosystem. You've got all these layer 2 networks built to make Ethereum faster and cheaper. Great idea, but now the whole space is just unbelievably crowded.
I mean, this chart says it all. There are more than 50 of these things to choose from, but the market has clearly already picked its favorites. Just 3 of them, Base, Arbitrum, and Optimism, are handling almost 90% of all the transactions. And Base, which is Coinbase's project, is just a monster, handling over 60% all by itself.
So that leaves a pretty big and kind of scary question, doesn't it? If just 3 networks are getting all the action, what on earth happens to the other 50 plus?
Well, the answer is kind of brutal. A lot of these smaller projects are turning into what people are calling zombie chains. Yeah, they're technically still online, but nobody's there. No users, no money, nothing. They're basically digital ghost towns. And it's a super clear sign that the market is thinning out. Okay, now let's get to the really fun part, the sci-fi stuff. Because with this stronger, more stable foundation being built, we're starting to see some truly wild ideas become reality. First off, prediction markets. These are basically places where you can bet on the outcome of pretty much anything in the real world. Like who's going to win the next election, or will the Fed cut interest rates? You can trade on it. And this whole area is projected to just explode, hitting over 100 billion in volume every year.
But even cooler and honestly a little mind-bending is this idea of an agentic economy. So what if you could just tell an AI assistant to manage your crypto for you? Like you literally give it the keys and it goes out and interacts with all these different apps on the blockchain for you without you having to do anything.
And here's how easy it could be. You just type a simple sentence in plain English, like, hey, take my ETH, move it over to Base, and find the best place to lend it out. And then the AI does all the hard work. It scans all the options, figures out the best possible strategy, and then just does it. All those complicated steps done for you automatically. It just gets rid of so much complexity for regular people.
Okay, so let's tie this all together. What's the big takeaway for 2026? Well, it's pretty clear the crypto market is going through a massive change. You've got all this big-time institutional money coming in, making things more stable. That stability then sparks way more competition, which means we're seeing winners and losers emerge. And maybe the most important thing is that the focus is finally shifting away from just wild speculation and towards actual real-world usefulness, with amazing new tech like AI leading the charge.
And all of this leads us to one final, huge question. It really feels like crypto's Wild West days are coming to an end. A more serious, robust foundation is being built right before our eyes. So the question we have to ask is this it? Is this the moment crypto is finally ready for Wall Street? And maybe even more importantly, for Main Street? Something to think about.